They said, he will start a war. I'm not going to start a war. I'm going to stop wars. But this is also a massive victory for democracy and for freedom. Together, we're going to unlock America's glorious destiny, and we're going to achieve the most incredible future for our people.
What's the first war he's going to stop?
Well, it's quite likely that there will be a move toward a ceasefire.
Matt Gertken, Chief Geopolitical Strategist at BCA Research, is back with us to break down what the Trump victory means for the economy going forward. Welcome back to the show, Matt. Good to see you again.
Hey, David, you too. Good to be back.
Well, it looks like not only has Trump won, but it looks to me like it's going to be a clean red sweep. So the Republicans now have control of the House and the Senate going forward. We'll talk about what that means for legislation and certain economic policy changes that may be made in the next 2 years or so. But Matt, the results that came in earlier this week, which surprised you the most?
I'm most surprised by the fact that Trump won a popular majority. He won about 51% of the vote, a little bit less than that. And we haven't seen a Republican win a popular majority since 2004. So that, for President Trump, who had previously only gotten 46.9% of the popular vote, that is a victory for him. And of course, it means that in reality, he swept the blue wall, Michigan, Wisconsin, Pennsylvania. And that was what this victory was really about, because it reflected once again that U.S. elections are hinging on the Midwest, the Rust Belt, the desire of the population to improve the industrial base.
Take a look at this chart here from the FT. Trump has increased his support across the electorate. So we have pretty much every single demographic except the 65 plus and white college women shifting towards Republican in this particular election. And of note, Hispanic, Asians, and even the blacks shifted towards Republicans. This took a lot of Democrats by surprise. What happened here? Why? What? This was a not just a political but also a social shift. It looks like.
That's right. And when you look at these kinds of numbers, there's different ways of representing them. I think when you look at all the numbers and you sort of look from different perspectives, what you'll find is that it was really a remarkable move among Hispanics. And so that's reflecting inflation. That's reflecting that this is a demographic that hasn't always had the highest vote participation. But when you mess with the bread and butter issues by causing price increases for food and fuel, then suddenly there's going to be a change. And Trump did especially well among Latino men. And so this is a new dynamic, and it's one actually that across Trump's different elections that he's been in, you've seen this sort of creeping up, but the shift in 2024 is really big. It's a big downward shift for Democrats and a big upward shift for Trump. And I think it reflects inflation, which was the real cumulative inflation was the real driver in this election.
Do you think that maybe they were voting against the Democrats as much as they were voting for Trump?
That's an interesting point. Actually, it's a pretty significant move up for him in that vote, in that group, but it is also a big move down for her. So it was a little bit of both in that case. With blacks, it was definitely a lack of enthusiasm for Kamala Harris. Only 12% of blacks supported Donald Trump. So it's not like we can say that this is a huge change in the black community, but what we can say is that their support rate was normal, maybe a little bit low, and they didn't turn out to vote. And that's the biggest issue here, is that in general, Democrats just didn't turn out to vote the way that they did in previous elections, whereas Trump got all of his supporters out.
Yeah, so what exactly went wrong with the Democratic campaign?
Well, I think, again, the main thing is just that they spent $5 trillion and they inflated the economy. And that was sort of the original sin of this administration. And it goes back to 2022 when inflation was peaking. And what's interesting is that they sort of squeaked by the midterm election that year because the Supreme Court overturned Roe v. Wade, and that was a major social event. And so the midterm election did not go as badly for them as was expected. And that meant that in the 2024 cycle, a lot of us, including myself, thought that would still be something of a tailwind and the Democrats wouldn't do as bad just because of inflation. But what we found is that the 20% price increase, the 20% increase in the price levels over the 3-year period really motivated a huge opposition. And I saw that happening in mid-October. That's when the polls really started to shift. And that's when I changed my forecast to Trump, because I could see that it's an interpretive question. Do people care more about inflation or do they care more about unemployment? And when we saw the polls shifting in mid-October, that really told you how people were thinking.
The argument that because the economy was the number one election issue and people voted against the incumbent, the economy must be doing very, very poorly despite government numbers. Do you buy that argument?
No, I think I mean, the economy is doing okay. Real GDP is growing above trend at 2%. It's just that inflation has been high and it's been high
Yeah.
over the term. So when we think about, remember Ronald Reagan asked that famous question, are you better off than you were 4 years ago? That's a really good heuristic for analyzing US elections. And it really bore out today this week in 2024 because what you have is people saying, no, I'm really not better off because my real wages actually weren't growing over this period. And especially in blue states, real wages were shrinking because of inflation and they never got back into positive territory. And Harris lost the blue wall.
Okay, I want to play for you this clip of Trump talking about foreign policy. Take a listen here.
Analysis of the people that voted for us. Nobody's ever seen anything like that. They came from all corners, union, non-union, African American, Hispanic American, Asian American, Arab American, Muslim American. We had everybody, and it was beautiful. It was a historic realignment, uniting citizens of all backgrounds around a common core of common sense. We're the party of common sense. We want to have borders. We want to have security. We want to have things be good, safe. We want great education. We want a strong and powerful military, and ideally, we don't have to use it. We had no wars. 4 years, we had no wars, except we defeated ISIS. We defeated ISIS in record time, but we had no wars. They said, he will start a war. I'm not going to start a war. I'm going to stop wars. But this is also a massive victory for democracy and for freedom. Together, we're going to unlock America's glorious destiny. We're going to achieve the most incredible future for our people. Yesterday, as I stood at my last stop on the campaign trail, I'll never be doing a rally again. Can you believe it? I think we've done 900 rallies approximately from them. Can you imagine?
So he's going to stop wars, he said. He doesn't start wars, he stops them. What's the first war he's going to stop, you think?
Well, it's quite likely that there will be a move toward a ceasefire in Ukraine, not a peace treaty, but a ceasefire. And that's because this election, even aside from Trump, shows that U.S. voters are upset about inflation. Well, what's on the chopping block when they go to cut spending? The first thing on the chopping block is Ukraine. Americans are not going to want to spend another $100 billion over the next year or two on Ukraine. And so that means that Ukraine's going to be undercut. And Europe is also going to be reading the writing on the wall. If the Americans are reducing support for Ukraine, then they're not going to have as much appetite. And they've had a lot of voters in Europe already pulling back from that war and sort of demanding that their governments reduce spending there as well. So there's just a desire by the West to not escalate the war and to try to negotiate a ceasefire. This sort of throws Ukraine under the bus, but Ukraine is going to have to deal with the circumstances that it's given if the U.S. and the German and the European publics start to shift their view. So that's probably the likeliest ceasefire. Russia would accept a ceasefire at some point. One, it might get better terms now if it knows that Trump wants to do a deal. But two, Russia has spent enormous blood and treasure on this war, and so it might not be a bad time for them to start to pivot and try to rehabilitate their economy and improve their society, because they're going to be facing a very unstable society over the coming years. And so that would probably be the first candidate. And I should say, the Middle East, you're not going to have a rapid ceasefire or peace in the Middle East. Instead, what we're going to have is an escalation of the conflict there. The Iranians have already pledged to retaliate to the latest Israeli retaliation. And the Israelis have a unique opportunity to attack Iran because its missile defense has been taken down in the latest attack. And so Trump will not be able to de-escalate that situation immediately. In fact, it could escalate during this interim period when Biden is a lame duck president, or it could escalate under Trump's watch. But the point is that it's falling into Trump's lap in this coming term. the question whether the U.S. will reinforce the red line against Iranian nuclear weaponization. And so he will have to deal with that one way or another. He won't be able to wish that away. Could he get a diplomatic deal with Iran to freeze the nuclear program? Yes, he could, but it's going to take a while. And the way things are going to start out is going to be pretty rocky because he will begin by enforcing oil sanctions, which have not been enforced. And that will destabilize Iran and cause retaliation.
Well, on the Gaza front, this is what Trump said right before the election. Trump told Netanyahu he wants Gaza war over by the time he enters office. The message was first conveyed when the Republican presidential nominee, hosted by the Israeli premier at a Florida Mar-a-Lago resort in July, according to a Trump administration official. So the former U.S. official stressed that Trump wasn't specific in his appeal to Netanyahu. Okay, so suppose he keeps in line with what this was communicated earlier in the year. How would Israel do this?
Well, first, though, let me say I wouldn't view this as a separate war. You know, Hamas was funded by Iran. Their capabilities came from Iran, and they're a proxy of Iran and a partner of Hezbollah and Iran's other proxies. And so I wouldn't view this as separate. The Israelis have achieved a lot of the objectives they wanted to achieve, so they can quite easily shift their focus. They already have shifted their focus to Hezbollah in the north and dealing with Iran. And Iran's going to be retaliating to Israel from different places, not only, the Houthis, but also like Iraq. Hezbollah in Iraq is going to be more active shooting missiles at Israel. So we're going to have an escalation on multiple fronts in Lebanon and Syria, Iraq, and ultimately between Israel and Iran. And that's all going to be taking light. So I don't disagree that you could have a ceasefire in Gaza, but I would not treat that as a standalone war or as a separate issue from the underlying issue of Israel's confrontation with Iran.
So Israel, yes, you're right. Iran has vowed to retaliate against Israel's strike. They did say they will wait until after the election. Well, the election's over. Technically, Trump isn't in office yet. It's still Biden and Harris in office. But does the Trump victory this week change the calculus for the Iranians?
It does in the sense that they know that he's going to enforce the oil sanctions, whereas the Democratic Party has been extremely averse to doing that. The Democrats have had a long policy of trying to engage Iran and open up their economy and get their nuclear program to freeze through diplomacy. And so now they're looking at a much higher prospect that the U.S. will actually enforce those sanctions and will push back militarily in some of their key strongholds in the region. And so the Iranians might want to get the jump and take the initiative and act before Trump is in office. The only risk that comes with that, which is a significant risk, is that remember that Biden now, the Biden administration, is not limited by the election. So they're not as afraid to retaliate. So if Iran does anything too aggressive, then they could get smacked by the United States, which is no longer in paralysis waiting for the election to happen. Instead, Biden might be looking to seal his legacy. I think the key here is that Israel has an enormous opportunity, and Biden doesn't really have the ability to restrain Israel anymore. And so I would guess that things would escalate sooner rather than later. But it's certainly possible that the period of calm lasts a little longer while Israel and the United States align their positions under the new administration.
How will things change between the U.S. and China during the second Trump presidency?
That's a critical question. U.S.-China relations. Trump, his election in 2016 signified a historic change in U.S. policy away from engagement with China and toward more competition. And of course, the Obama administration had gingerly attempted to move in that direction because they had seen China's attempt to convert its economic prosperity into strategic capability, particularly in the South China Sea, but also with regard to technology. And that technological theft prompted a pretty significant reappraisal in the Obama White House in 2015. So what we saw is that the Americans really switched their view on China and started to view China as a clear, peer level competitor that had been ignored. And the Americans sort of panicked, and we rapidly built this bipartisan consensus that China needed to be countered. And we saw that executed under the Biden administration as well as Trump. Biden did not remove any of the tariffs, and he expanded the technology export controls and also started moving toward imposing investment controls, capital controls. So I think those trends are going to continue. Trump's preference is tariffs, and Trump's preference is also to get a phase 2 trade deal to follow the phase 1 trade deal that he negotiated in 2020. And he may well be able to do that. But the United States, the deep state, the Pentagon, the military industrial complex, the intelligence agencies, they're not going to want President Trump to trade away long-term American security interests for short-term purchases of goods. So if that's the deal that Trump negotiates over the next couple of years, then he may quickly find that the bureaucracy opposes that deal, undermines that deal, sabotages that deal in order to underscore that China still poses a strategic challenge to the United States.
Yeah, Asian markets like the Hang Seng, for example, did not immediately react well to the November 6th election results. The Hang Seng dropped. It's since rebounded the day after. But the point stands that Asian markets didn't like the fact that Trump won. Tariffs are obviously, something to be factored into foreign markets. How do you think tariffs will impact, not just foreign policy, but the prices of goods of other countries, not just domestically? You think it will be a global inflationary impact?
Ultimately, yes, but there is some nuance here. When Trump got elected, we saw this, and this is what I expected. We saw the euro depreciate, the biggest depreciation since 2016 in the euro. We saw the renminbi depreciate, Mexican peso. So in other words, currencies that are going to get slapped by tariffs, they're all dropping to discount that process. And the markets are well aware of the situation and very much ahead of whatever Trump is eventually going to do. And you have that initial discounting, and then maybe these currencies can bounce a little bit until later, sometime next year, or even in 2026. We don't know when Trump is going to actually apply the tariffs, but at that point, the currencies take another down leg if they've managed to kind of come back. But the point is that the way that these countries will discount the tariffs is by having their currencies depreciate, and that's a market function. And then what happens is that the tariff doesn't have as much of an impact for U.S. consumers because the price dropped due to the currency effect. But what happened over in those countries is that they lost pricing power because their currency depreciated, and so their own imports weaken, and that's a negative shock to global growth. So I think tariffs initially, especially if Trump goes big like he says he will, a 10 or 20% tariff on all U.S. imports combined with targeted tariffs against places like China, this will cause a trade shock. It will be negative for global growth. It will cause us to downgrade global growth. It will cause us to downgrade most other currencies. And that is not immediately inflationary. Once the global economy stabilizes and you have a new equilibrium, then going forward, you get global growth rebounding, and Americans are starting to pay higher prices because of these tariff levels.
Okay, so are you bullish the DXY then for the medium term?
Definitely, and I have been, and that was one of the trades that we put on when we saw clearly in October that Republicans were going to win a red sweep. That was our final prediction, and we put on a series of trades, and dollar is very clearly one of those. And I think that can last up until the point where tariffs are applied, and we start to see pushback between the Fed and the Republican Party. Because what's going to happen is the Republicans will stimulate the economy through tax cuts. And it really depends on the underlying business cycle. But if the business cycle continues to be a soft landing and Republicans are applying stimulus, then you're going to see the Fed react saying, well, we might have to keep rates higher for longer. Or heaven forbid, we might even have to hike rates again. Probably not, but maybe. So the point is the Fed has to be a little bit more hawkish, a little more vigilant, and that's where we then see President Trump get entangled with Chairman Powell once again. And that starts to become a risk to the dollar because Trump could, of course, he can fire Chairman Powell, cause a big controversy about that decision, and then raise the question of who will the Senate appoint or confirm, I should say, for the next Fed chair. And that until that Senate vote is resolved, the dollar will be quite weak during that period.
Okay, so that's a good point. Let's talk about the Fed. Let's assume that some inflationary pressures will be felt by these tariffs at home in the U.S., and let's assume that the Fed is aware of this. We're speaking a few hours ahead of the FOMC meeting. It's pretty much priced in the markets that the Fed will cut by 25 basis points today. We'll see what happens in a few hours. Going forward, though, will Powell be a little bit less dovish because Trump won?
I don't know on a personal level, but what I can say is that because the Republican agenda is calling for a large tax cut, really sweeping extension and expansion of the 2017 tax cuts, we will have larger budget deficits and a greater fiscal thrust in the economy, and that will push up inflation. It probably will require the Fed to be a little bit less dovish, and that's just natural, right? That's the Fed reacting to new conditions
Hmm.
coming from fiscal policy. And the and if the underlying labor market is somewhat weak, then none of this is really a problem. Because if you have we are starting to have a weakening labor market, but then you add some fiscal stimulus to that's just sort of avoiding a recession, and it doesn't necessarily cause a major increase in inflation. But if that labor market turns out that it actually is quite resilient and it's not cooling as much as I think, then you add fiscal stimulus on top of that, you're going to have an overheating economy, and that's when the Fed's going to have to really kick into action.
I'm going to come back to the recession at the R word in just a minute. This is the chart showing. This is the chart showing the U.S. dollar versus the 10-year yield, and you can see a perfect correlation all year round, year to date. Now, if you're bullish on the DXY, are you also bearish on bonds? Then expecting the yield to go up, long end of the curve to go up?
Yes, that has been my view going into Trump, and again, since October when we saw him start to really take the lead, we saw that yield curve steepening, and so that confirmed what we expected and what many in the financial industry have identified, which is that this agenda pushes up the long end of the curve, and the reason for that again is clear because you ended up with a soft landing but a red sweep. Even if it had been a blue sweep, you'd be seeing this. It doesn't matter about the political party. It's about the fact that you're having a government that's capable of driving up budget deficits. And that's what these
Yes.
governments typically do when one party controls, the entire Congress and White House. And so now in the Republicans' case, they do it through tax cuts. So there are some interesting phenomena that will become relevant later. Like, if you really want to supercharge your economy, you do direct spending. But Trump and his crew are actually going to cut some spending, and he's got Elon Musk, there to help streamline the government. So they're going to cut some spending, but they're going to cut taxes by more. It will be a net stimulative impact, a net increase in the budget deficit. But over time, that's just sort of like a sugar high. And a lot of that money may not be spent in the economy because it'll mostly go to the wealthy or to the stock market. So, in other words, the stimulative impact here, it will be maybe exciting at first. It may not end up being that big overall. And so that could be an issue later in 2026 or something. But for now, the bond market has to react to the fact that the American policymakers are responding to voters. Voters say we want to be compensated for inflation. That means you give more money to consumers. What are they going to do? Well, they're at least going to spend some of it. So inflation actually goes up rather than down.
Okay. Well, let's finish off by talking about what they could do next. Let's speculate as to what policies may be enacted or changed first with the Democrats, or sorry, with the Republicans now controlling the House and the Senate. Trump has an easier path to making changes. What do you think the Republicans would want to do first come January?
Well, as long as the labor market is sort of okay and not just, collapsing in the aftermath of the election, then Republicans do not have to cut taxes immediately. Instead, I think they would prioritize immigration, which is the major motivation of the Trump movement and which Trump failed to do during his first term. So I think a signature legislation on immigration, would be the priority. But then when we get later in the year, the Trump tax cuts of 2017 will expire, so they're forced to do something by the end of 2025. And that deadline would be helpful in getting Congress to put together a new tax overhaul and pass it through the budget reconciliation process. And that would involve extending 2017 tax cuts, expanding them, maybe not expanding them as much as Trump promised on the campaign trail, because they will be battling with bond yields and with inflation. expectations at that time. But it does imply that by the end of the year, we've had a major overhaul of immigration and we've had a major tax cut. And that's why the market will be reacting this way with higher inflation expectations and higher bond yields.
What do the Republicans need to do to stave off a recession, if that is indeed anything on their agenda?
Well, right, because they may not be worried about it. The
Yeah.
consensus is that recession is just totally irrelevant and that whole discussion, was a misnomer over the past couple of years. Now let's point out, look, I mean, job openings are falling sharply, and the willingness of workers to quit their job is collapsing, right? No one wants to
Yeah.
quit their job because they're not sure they can get another one. So the labor market has weakened. A lot of those swing states are seeing rising unemployment levels, and that helped Trump, at least on the margin. Although the level is still low, it's rising, but it's rising off of a low level of unemployment. So you can't necessarily say we're certain to go into a recession, but the risk is a lot higher than people recognize. But the Republicans, by winning a red sweep, have already sort of started to address the risk, because the way the market reads that psychologically is, well, we don't have to worry about a recession because we know that a full Republican Congress can deal with it lickety split. And they already plan to cut taxes in a big way. So, like we were just talking a minute ago, Republicans could simply accelerate the tax cuts if they needed to because of a precipitous drop in the labor market. The point is that the policy setting is now capable of providing more government support, and that means that the recessionary risks are really not as great as they were. Now, there's a counter to that I should at least mention. Well, if everyone expects Trump to do these things and the bond yield goes up too high, well, that means that you're actually imposing a higher interest rate on the society, so you could accelerate a recession. That is a concern. So I think Republicans are going to have to be very careful how they jawbone around this issue, because they don't want to precipitate a recession by making extravagant claims about how huge budget deficits they're going to run. But they do have the means in their own hands. And let me just conclude this by saying, remember, Republicans cannot raise taxes. That's against their religion, basically. Well, what that means is if inflation and yields are rising, ultimately they do have a problem, because they can't just counter it by raising more revenue. They've just got to cut more spending, or maybe not cut taxes as much as they promised. And this is going to be a dynamic that we live with throughout 2025, and I think it could be quite volatile for the bond market.
It would be the mother of ironies if the bond yields go up on the prospect of higher economic growth, and that would induce a recession.
Yeah.
But you're right. That's something to keep an eye on. Okay, so finally on market impacts, you told me early in the summer that should the Republicans get a full sweep, which is not what we have, the markets wouldn't like that as much as maybe a mixed Congress. So do you stand by that?
Well, things changed a little bit. My main point there was that if Harris had won, but then I expected Republicans to take the Senate for sure, then in that case, it wouldn't have really been any change to policy whatsoever. And in fact, they would have prevented her from raising taxes, so it didn't pose a threat to corporate earnings. And I think that would have been a bullish environment. So we would still be seeing a lot of rallying but we'd especially be seeing the rally in global equities, ex-US, because they'd be saying, no trade war, right? But I think U.S. equities would still be rising right now if that had happened. So we would be getting a post-election relief rally regardless. And I do stand by that part of the statement. What I would say, though, is that if Trump, right now, we still don't know the exact answer in the House of Representatives. I fairly remain confident in my forecast that Republicans will take the House. But let's say that Republicans in the final count don't actually get a majority in the House. That's a gridlock scenario. It may disappoint the market, and the reason is because if Trump cannot deliver tax cuts, but he can deliver tariffs, which is what that would mean, well, that's really not so bullish. So from where we are today, a Trump gridlock, I don't think is really that bullish of an outcome. And so I think that's a new piece of information we should take into consideration. But had it been, a blue gridlock, I think markets would be rallying right now the same way that they are.
Final question before we go, Matt. This is on your going back to your immigration point. Canadian media is little bit worried about immigration into Canada. Huge implications. Trump election highlights possible BC immigration impacts, but this is all over Canada. Quebec, Legault is saying the same thing. In the lead up to its election victory, Donald Trump announced a variety of policies that could have a potential impact in Canada, including a promise to deport millions of undocumented immigrants. This has huge implications for Canada. You're going to start seeing more asylum seekers coming to Canada immediately. So people are already talking about this all over Canadian news. How would this trend or phenomenon impact Canadian and U.S. relations if this were true?
Well, it will be pretty testy, right? And I think the issue first, I do think this is logical that this would happen. So it may well continue to happen. But then, you have an ideological split where Trudeau and Trump never got along well, and Trump's back. So he sees how weak Trudeau is now, and so it's not like he's going to be pulling any punches when dealing with Trudeau. And Trudeau has an election coming up, so his hands are sort of tied as well. He has to act hawkish on immigration, even though that obviously wasn't his disposition earlier. And so, I think
wouldn't that alienate Trudeau's core supporters?
At this point, I'm not so sure. I mean, his core supporters maybe, but at this point, he's really in a fight for survival, which I don't think he can win, to be honest. But the point is, he has to try to appeal to the median voter in Canada, and the median voter in Canada definitely feels that there's been far too much immigration, and it's caused housing crisis to go much worse. Right. So I think what that means is it sets them up for a clash. It sets Trudeau up for a humiliating and sort of impossible set of circumstances. But I think the opposition is already very likely to do well in Canada in the looming election. And once that occurs, you actually have a change that's advantageous for Canada because it means that Canada would, first of all, be easier to align with the U.S. on immigration, but also on trade. And Trump ultimately does want to renegotiate the USMCA, which was his own trade deal. So 2026 deadline to get that renegotiated in the summer, and probably it'll get done. So I think it'll be a sort of tempest in a teapot. We'll probably have a year or a year and a half of very unusually very frosty U.S.-Canada relations, and it'll probably not be good for the Canadian dollar. But when all's said and done, not really much to worry about because the main beef that the U.S. has is with other countries when it comes to trade. And from a strategic point of view, Trump's advisors are going to tell him, you're barking up the wrong tree if you're devoting your entire term to fighting trade wars with Canada and even Europe as opposed to China. So anyway, I think it will be a little bit dicey, but probably not the main focus of the coming years.
Excellent. Thank you very much for your breakdown, Matt. We'll follow you at bcaresearch.com. So we'll put the link down below. We'll speak next time. Take care.
Okay. Thank you, David. Bye-bye.
Thank you for watching. Don't forget to like and subscribe.